Well, it's exciting times certainly to be an Indian investor, and the number of startups that are going to be hitting the Lal Street is going to be significant over the course of this year and next. But it's important to understand how to look at these companies, how to value them, and what the approach should be over the course not just of the next couple of years, but over the course of the next 5 years and possibly over the next decade. It gives me pleasure to introduce to you my first guest today. We've got Nimesh Kampani, who's president at LestVenture, joining in. Thank you so much, Mr. Kampani, for taking the time. And I want to start by asking you, a lot of these new age digital first companies are hitting the bourses. Is going to be a major change for the Indian investor. What is the institutional perspective though? I know that a lot of retail investors are excited. How will the big investors approach these upcoming IPOs?
Thanks Alex, for having me on the show. And I think that's a good question. I think if you go to see what is also happening, right today, if you see a lot of institutional investors, the long onlys, the hedge funds as well as the sovereign funds, right, have already started taking position pre-IPO into a lot of these new age technology companies, right? So I think, of course, there can be a lot of reasons for that. Of course, India is a large market, and you can give all of those examples. But if you see the traditional companies that we have listed on the bourses, today would grow around 20% and in that range, right? But when you look at the new age companies, they are growing at around 50%. So everybody wants a slice of that pie. So I would see a lot of interest coming in from foreign institutional investors, some of the domestics as well. And I think that is what you will see as we go forward during this year.
Okay. Now, just to name a few, you have the likes of Zomato that is likely to hit the bourses. You have Paytm. You have later this year possibly the likes of Nykaa, the likes of Lenskart, a number of these new age companies. The big question though, Nimesh, is how do you value them? And this, I think, a lot of people are going to be struggling with. There's certainly a premium being attached to several of these being household names already. And retail interest, like I said, is going to be tremendous. But on an ongoing basis, how do you value them?
So this is a very interesting question, and I think we should look back to what the poster boy of tech startups, right, Amazon has done, right? If you just look at the history there, we're listed around 97 when it was a loss-making company, right? The first time it reported profit was after 10 years, right? And it actually, if you were to read about it, you will see that I think the reason why it did very well and the reason why it has turned profitable is multiple things that it did. It focused on getting new users, right? It focused on investing in new categories and it led to acquisitions and always was launching new products and services. So I think it goes back to the basics of any new age technology startup, which is user, usage, and monetize, right? I think that's the way I think one should look at it, right? Getting users is the most important part, right? That is what is building the base. I think getting them to use your product, because humans tend to be quite a lazy bunch, right? Innately, we are quite lazy. So once we get used to something, it's not going to be easy to move on to something else, right? And of course, once the usage is there, you see the people monetize that, right? And I think that's the philosophy with which all of these startups work. And that is what is something that one should keep in mind on what is happening on that front. So when you look at these IPOs, right, I think, of course, people will say the valuation is rich because in traditional IPOs or traditional companies, we are used to valuing them based on their earnings growth potential, and they're already mature companies in a way, right? They're already profitable and mature. But in this case, I think the focus should be on one of the two things, right? The focus should be on the growth of users, right? Because all of these companies are quite nascent, right? They are today largely in the urban centers in India, right? And yet to penetrate largely into the internets. So I think the focus on growth of users is important. And second is the path to profitability, right? And when you look at path to profitability, you'll go into unit economics, you'll go into customer acquisition costs. So I think a lot of benchmarks will change on how you look at these companies. So when I'm looking at any of these IPOs that are coming, I would want to see what is the use of funds. Right? Is it an investment into new technology or a new product or service or a customer acquisition, or am I just giving exit to Ps and VCs who had entered early? Right? I think so. That is something that I would keep as my benchmark when I'm looking at these. Because if you look at the growth opportunity in India is tremendous, right? But it's just that how we are going to use this money. So I think I'll keep my eye on what is the growth plans, right? How is the investments going to unravel as it goes forward, and ultimately profitability will come. But I think patience is the key. I think the investors will have to look at it with a long-term lens, because you might have short-term blips because of the way the markets behave. But I think ultimately in the long term, it will create value.
Absolutely. The path to profitability is very key there, from what I take from what you have said. But just to play devil's advocate here, Nimesh, unlike the Amazon and when it listed, a lot of these companies are benefiting from that experience that people had with the likes of Amazon. You said is a poster boy of the startup world, and that certainly is the case. Quite a few of these companies are hitting Dalal Street with trumpets and fanfare. So one could argue on the other side that they're already valued at a very rich premium. What are investors getting when they're getting in at this stage, Nimesh? Is there enough on the table?
So I think that is where your patience comes to play, right? Something might look expensive today, but of course, when you're looking at quality, when you're looking at business with moats, right, there would definitely be price attached to it, right? Today, even if you look at the listed stock, if you look at the large listed FMCGs or the large banks, all have rich valuations, and they've been having rich valuations for the last 2-3 decades. It's not that it's just something that has happened. So I think when you are looking at businesses with moats, businesses with huge market share and huge potential for growth, I think they'll always be richly priced. And as I said, the key in this will be the patience, right? You'll have to hold on to it for a longer term. And the long term here, I mean, is not the 1 year long term that we typically use in the Indian parlance. Typically, I think you should look at it with a 5-year perspective, right? And as I said, the use of funds is very important, right? Whether it's
I was actually Sorry, I was actually coming to that. In that, traditionally you would look at a 1 year forward multiple or a 2 year forward multiple, and you would look at trying to value the company as it stands right now. But like you said, first of all, some of these companies are growing at 50%. At what multiple and what value or what valuation metric would you use at this juncture to value these companies? Just a follow-up to the question that I asked you earlier.
Well, when you're looking at, say, a B2C company, right, I think it will no more be about earnings, because earnings aren't there, right? Revenue multiple is a thumb rule that people would apply. But I think what is more important is to look at unit economics, right? And just the case of Zomato, right? Zomato unit economics was a $30 loss on each delivery that they were making a year back. Today they are turning profit, because of multiple of factors, right? The usage has increased, the order size has increased. So I think all of those things will come to play, right? You need to look at unit economics. You need to look at what is the lifetime value of the customer, because what you are betting on is the growth in customers, right? What you're betting on is the customer retention rate. So a lot of these metrics that people look at will have to change, right? And you'll have to put a different lens when you're evaluating these companies.
Absolutely. And, certainly going to be a cause for a lot of us to maybe look at these companies differently, to study these companies differently. It's been an absolute pleasure, Mr. Kampani. Thank you so much for taking the time and for putting this in perspective ahead of some of these mega IPOs.
Thank you, Alex. It was nice meeting you.